Okay, everybody. Hello, what's happening? It's been quite a time, and I've not dropped some information for you, and here am I. So basically, today I'm going to talk about top-down analysis. So I'm going to divide this video into two sections. The first section is going to be the psychology of top-down analysis, and the second section is going to be the chart work. So this is going to be about the psychology. In this video, I'm going to explain to you all the methods, all the thought processes, all the what you need to know about top-down analysis. And when you understand the psychology behind top-down analysis, even if you did not see the chart work, even nobody talked to you about how to plot some key levels and how to do some arithmetic on the chart, you can still go ahead and do it. So this video is as important as you watching me do the chart work live on trading. Top-down analysis is just like studying history. When you understand the history of a culture and understand the history of a community, you can foretell what is going to happen in the future. Now, I will start with my own story. When I heard about top-down analysis, the first thing I did was that when I open the chart, I go to yearly time frame. You can imagine how ridiculous and naive I was as of then. So I will go to yearly time frame. I will see how the chart, basically like on my phone, I will bring the chart, I'll condense it to one single screen on my end, and I'll try to analyze the market from 1 year. I'll come to 1 month, and I'll come and place position on 15 minutes, and you know the outcome. I'll hit my stop loss. So I'm going to teach you on how to do top-down analysis, and I'm going to teach you the step-by-step breakdown of to do top-down analysis. Now, the basics of top-down analysis is not just going to the higher time frame. Let me tell you this as a free nugget. Top-down analysis doesn't necessarily mean you starting from the higher time frame. In fact, you can do a top-down analysis from 15-minute time frame downwards. So top-down analysis is not all about going to higher time frame. Top-down analysis is just that you're analyzing a market from a higher time frame coming to a lower time frame and to a lower time frame. And of course, I just don't want to say it, but 5-minute time frame is a good top-down analysis. You can start your top-down analysis from 5 minutes to 2 minutes to 1 minute. But of course, you know that we do top-down analysis more than that. But the psychology behind top-down analysis is that you're starting from a higher time frame, you are coming to a mid time frame, then you have your lowest time frame. Basically, top-down analysis is divided into three sections. First, you have your higher time frame, the mid time frame, and the lowest time frame. The higher time frame is where you are going to determine the trend of the market. Now, your highest time frame, that's of your choice. Now, this is one of the key things that you are going to notice. Key number one, in top-down analysis, there is no specific time frame. You can decide to start your top-down analysis and take your higher time frame from 1 year, which is absurd, it's not possible, or 1 month, or 1 day, or 1 week, or 4 hours, or 1 hour. You can start any of your top-down analysis. And at the end of this video, I'll give you how I do my top-down analysis. And then the last market breakdown I released, like many guys have been saying, I've been like talking back like your forecasts are going well, your forecasts are right. It's just top-down analysis. There's nothing magical about that. Understanding the basics on how to plot your key levels and taking your top-down analysis from down to bottom. So what I want you to understand is that your highest time frame is any time frame of your choice. So when you take your highest time frame, then you can pick a medium time frame, then you can have your lower time frame. And all these three time frames has their own purposes. That's what I'm going to go deeply in this video. First of all, your highest time frame is the time frame that you are going to determine your trend. Your trend is going to be determined from your higher time frame. Let's take for example now a river. Whenever a river is flowing, you will not want to go against the current. That is what it means to start a top-down analysis. When we are doing top-down analysis, what we are actually doing is that we are trying to determine the strengths of the market, the power, like where is the force going to. And one of the things you will want to know is that even if you take a wrong trade, if you take a wrong position, but if you take it in that same trend magically sometimes you'll be seeing a swipe, a candles, like some drops or spikes depending on what trend it is. If it is an uptrend, you'll be seeing unexpected spikes to the upside. If it's a downtrend, you'll be seeing an unsuspected like spike to the downside. So trading with the trend, that is what the power of the higher time frame will give you. And of course you are aware of the notion that the trend is your friend. That is part of the psychology. So we pick a higher time frame only and purposely to determine the flow of the market. That is the only purpose of the highest time frame. You are not to analyze in the highest time frame. You are not to determine structure in the highest time frame. You are not to determine chart pattern in the highest time frame. The only purpose of your highest time frame is to determine the current, the flow, the trend of that particular pair you are analyzing. Now the second one is the medium time frame. Now the medium time frame is where the honey is. The medium time frame is the place where you determine the chart pattern, the candlesticks pattern, and the chart formation of your chart. Now let's say for example you are analyzing Euro JPY. If you're analyzing Euro JPY, the best time frame I will advise for you, you start your top-down analysis is 4 hours or daily. So when you determine the trend of that of your pair, as we are using Euro JPY now, in the daily or 4 hours, you are not going to analyze, you are just going to determine the trend. Where is the market moving? Let's assume the market, currently the market is moving in downtrend, hugely downtrend. Then you come to 1 hour and 15 minutes. As you see, I'm giving you like my trading strategies now. You come to 1 hour and 15 minutes. First of all, you start with the 1 hour. In the 1 hour, it's going to tell you what chart pattern is forming in this particular firm, and it's going to tell you what candles, how the candlesticks are forming in that 1 hour. And the only time frame that I'm so certain and sure that it gives a specific chart pattern and that you can rely on is the 1 hour time frame. And I'm saying this because I'm a day trader, and my trading strategy is strictly day trading, and that's why I can give you this for free. If you determine your chart formation, I think that's the word I was looking for, chart pattern and chart formation in the mid time frame, that is all you need. The chart pattern, your chart formation. Basically, in the trading strategies, most of them take advantages of chart patterns and chart formations. So we just add a little catalyst to our entries, and that's why we call it strategy. And strategy is a very big, unique word. So we're not taking our strategy now. So let's finish what we are talking about. So in the mid time frame, you are determining, number one, your chart formation. Number two, your chart patterns, how they are forming and what patterns are they giving you. That's what you're going to do in the mid time frame. Then you go to your lowest time frame. Now in your lowest time frame, you are going to just look for entry levels. That's what you go. That's the only thing you do in the lowest time frame. Lowest time frame are going to give you entry levels. Mid time frame are going to give you chart pattern and chart formations. The highest time frame is going to give you a trend, and that's why you can see most professional traders, when they open the chart in less than 20 minutes, they have analyzed the complete chart of the market, because they just understood this basic thing, top-down analysis. How do you do top-down analysis? When you open your chart, you go to a bigger time frame. The bigger time frame will tell you where the market is trending, and when you know where the market is trending, you don't dare place trade against your first bias. We call it bias in the forex market. You should, because of course you can, but you should not trade or place any position against your highest time frame bias, because it's literally going to be crazy, and you are going against what you believe. You're going against what you are standing for, as your strategy may claim to be. So just as I said, the only thing you do in the highest time frame is determine the flow, the trend, how it's trending. In the mid time frame, the chart patterns and chart formations. In the lowest time frame, the only thing you're going to determine is your entry levels. Now I want to add some spice things to you. You might want to know them. Just write this down, it's going to help you. So you are going to determine your stop loss and your take profits in the medium time frame. You cannot determine your stop loss and take profit in your entry time frame, because your entry time frame is just trying to give you an entry point. It's only in the medium time frame where you have your chart patterns and chart formations. That's where you can pick and read what the market is doing, and you can have a stop level and you can have a take profit level. If you decide your take profit levels in your entry levels, your take profit is going to be low. And if you decide your take profit levels in your highest time frame, your take profit is going to be high, and is equivalent to swing trading. It's not the more day trading. So the only place where you have an optimum take profit and stop loss levels is in the medium time frame. So summary of everything and all I've said: for highest time frame, trend; medium time frame, chart pattern, chart formation, and you also determine your stop loss levels and your take profit levels; lowest time frame, entry levels. And monitoring the market is going to be determined basically on your medium time frame. So I just added like three things to you that I didn't even plan on saying on this video. So you can see the importance of the medium time frame and how it plays a major role. I think it has about 4 characteristics alone on the medium time frame. So my normal trading schedule or top-down analysis is that I do my top-down analysis. My highest time frame is daily and the 4 hours, majorly the 4 hours. But most times, sometimes the market will be so tricky, it will not want to give you a trend. So if you go to the daily time frame, you will understand what the market is doing. But most times it's in 4 hours. I don't exceed 4 hours, and my medium time frame is the 1 hour and 15 minutes. And most times I shuffle between the two depending on the chart formation and the chart pattern the market is doing. And my entry levels is in 5 minutes and 1 minute. These days I really enjoy placing trades in the 5 minutes, and I have some few experiences placing trades in the 1 minute time frame, because most times people will say sniper entry. We get sniper entries in the smallest time frame, and we get sniper entries in 1 minute and 5 minute entries. When we get the sniper entries, then we come back to medium time of analyzing our market. 15 minutes or 1 hour, we determine our stop loss and our take profit level. And sometimes we watch the market on the 15 minutes, we monitor the market on the 15 minutes, the 1 hour, and sometimes the 5 minutes. So that is the psychology behind top-down analysis. Now, what is coming next is the chart work of the top-down analysis. I'm going to show you how I do the top-down analysis on my chart. I'm going to show you how I use the 4 hours. I'm going to show you how I use the medium time frame and how I determine my stop loss levels and my take profit levels. So this being said, that this comes to the end of this video. So top-down analysis is very paramount. Top-down analysis is key in your trading. I think all trading strategies basically enjoy top-down analysis, because you don't want to be trading against it. You don't want to fight where you don't have an advantage. Yes, you don't want to fight a fight that you cannot fight. Does that make sense? Write it in your journal that this is my quote. You don't want to fight a fight that you cannot fight. So thank you. Have a good time.